Hello guys, it is Max here from Daily Market Movements, and today it is the 24th of September. It's Friday, the final trading session of the week. And boy, what a week it has been. We have seen an incredible amount of volatility from what happened in China with Evergrande, failing to pay back their debt. On Monday caused a huge spike in volatility. Even going through to Wednesday, we had the Fed minutes where the Fed basically come out and reassure the markets that they're going to carry on supporting the financial markets, and of course that spikes some positive volatility in the markets. Then going through to Friday, which this morning we heard news from China saying that cryptocurrencies are illegal, and we've also had the booster shot being denied by the chairman of, or the chairwoman, I should say, of the FDA. So it's all been going on this week, but volatility is good. It offers fantastic money making opportunities. So I'm going to go ahead and analyze some of the key markets here. That would be the gold markets, the Nasdaq100, the S&P500, the crude oil, and the euro US dollar throughout this video. Just basically concluding on the moves that we've seen this week and where we could potentially go going into next week. So in front of us, we're going to start off with the gold over the US dollar. Now, this trade is one of my favorites of the week. I have got this trade spot on. So what has happened with the gold markets? Well, on Monday, we actually bounced. When the stock market started to pull back, we had gold that, started to have a minor rally here. And on Wednesday, I said that this is a fantastic opportunity to short this market. Any minor rallies that occur in the gold markets should be shorted. I personally am bearish on gold. You may not agree with me, and that's absolutely fine. I know that many of you think that gold is going to go to a brand new all-time high. I was in that camp. I thought that a few months back, when we were trading, back at around the 1900 level. But since we've broken down and we managed to fall back below the 200 and the 50-day EMA, I have now become bearish. And I personally believe that gold will fall back down towards 1680, and then once we break out that 1680 area, I'm aiming for around 1500, where we found support back in March 2020, especially with the Fed. I personally believe that the Fed are going to announce that they're going to start to taper going into December, and that process will be finished by mid next year. So typically speaking, what happens after the tapering process? Well, we have interest rates that start to hike, and that is just going to pretty much write gold markets off. So let's see where are we now with the gold markets? Well, we're currently sitting at that 1750 area, so that midway point between 1700 and 1800. And as I just mentioned, I favour a move towards the downside in the gold markets, down towards that 1700 area at least. So let's go off 1700. That represents a 2.77% fall lower. That's 48 points here in the gold market. Now, one thing that I have kind of noticed here in the gold markets is that we have formed a slight ABC pattern. Now, for those who do not know what the ABC pattern is, the top of the markets here, we had the A movement, and then we went back up towards the B movement, and then we formed a C pattern. So there is your ABC here in the gold markets. Now, typically speaking, an ABC movement is normal. It basically represents a correction phase in a bull market. But for the ABC pattern for it to become bullish and to really trigger an upside movement, well, typically speaking, you have to break above this B section. And as you can see, on three separate occasions, we did attempt to break above this B section. Once you clear the B section, it opens up the leg towards where we started the A pattern, which is up at 1900. And that's why I said previously, when we were trading above 1900, I was very bullish, and I thought, there could be a potential here that we go and achieve a brand new all-time high here in the gold markets. But we didn't break above that B section to go and test that 1900 level, because if we would have cleared that level, that would have sent us flying probably up to brand new all-time highs. So the fact that on three separate occasions we failed to break above that B section, it says to me that we could be at least going down to go and retest that C section. Now, if we break below that 1680 level where the C section is, that would then trigger move down towards 1500. That is the camp that I'm more more favoring. That's the I am anticipating a break below the C section. But that being said, if we did get a steep a steep amount of buy-in here at that C section when we get to 1680, well, then that could potentially send us back towards the B section. So it's not all over yet for the gold markets. I do recognize that we could easily see a sharp amount of buying when we get down towards that 1770 and 1680 area, which would send us happily back towards that 1830. And if that was the case, if we broke above the B section, then yes, that could send us to 1900. But as I mentioned before, guys, I am favoring a move down towards 1680. And then if we can break below 1680, that then sends us to this area here where we found support back in March/April time 2020 as the Fed begins to taper. This is, I've just analyzed the chart from a very technical point of view, but you also have to look at the a specific market from a fundamental point of view. And fundamentally right now, gold is not looking great for the medium to long term future, especially with the tapering process about to begin, the economy as strong as it is, and of course with the interest rates still there's rumours that going into the end of next year, we could see interest rates starting to be hiked. So that's my view on the gold markets. It'll be interesting next week to see whether we can continue that move towards a downside down towards 1700. But on Monday, I will do a new video to update where I really am and anticipating the markets to move going into next week, day by day. But let's have a look at the Nasdaq100 chart here. So the Nasdaq100, I was a buyer. I mentioned on previous occasions that we had previously broken below the 50-day EMA. Unlike the S&P500, the 50-day EMA for the S&P 500 had offered plenty of support, and it was very rare that we'd actually broken below that 50-day EMA, dating back to March 2020, when the real massive sell-off occurred when COVID was infecting the world. But this week, again, we had briefly pierced below the 50-day EMA, and I was a buyer here. I recommended to all my Signal team and my VIP clients to buy the dip here, and I'm happy that we did, because as you can see, the Nasdaq100 has broken back above the 50-day EMA. I also mentioned this on Wednesday's video that I did favour a break back above the 50-day EMA, and from there, I do anticipate a move up towards the all-time high, which is up at 15,700. I currently still have a buy position, as well as my Signal clients. We are all very bullish on the Nasdaq100. The Fed coming out on Wednesday basically announcing that they're going to continue to support the markets is fantastic news for the tech stocks, the large growth stocks. So I am a buy here for the Nasdaq100. I think we go a lot higher next week. And then let's bring up the S&P 500. As you can see, this is what I was just saying, that for the very first time, we did have a pierce below that 50-day EMA, apart from these two occasions, which was mid-September 2020, and of course November. That was when we had the US election. But, for the very first time in almost a year, we have broken deeply below that 50-day EMA. But again, I advise my clients to buy the dip here. And of course, with the Fed coming out and, announcing that they're going to continue to support the markets, and they still anticipate the interest rates to remain at an all-time low, which is pretty much 0%, is very bullish for the stock market. And now that we're trading above the 50-day EMA, I think we go back up towards the all-time highs, up towards 4,500. It still offers a fantastic buying opportunity. You can put your stop loss just below the 50-day EMA and trade it up towards the all-time highs, and that gives you a fantastic 2 to 1 risk-reward ratio. We have the RSI down at 48, so it's still below the midway point, and we have plenty of room to run here for the S&P 500. So let's bring up the crude oil markets. A very volatile week in the crude oil markets. I just want to start by saying a huge congratulations to our Signal clients here. We profited very nicely here on the crude oil markets this week. I sent a buy signal down at $70 a barrel. which was at the start of the week. That's, of course, on Monday when we had the massive pullback in the stock market of roughly 3 to 4%. Crude oil got pulled back along with it, and I sent a buy signal down at the 50-day EMA, which is this area here. And, of course, going into the end of the week, we have bounced. I also come out on Wednesday on my YouTube video and said, buy the crude oil dip here. You are well supported with the 50-day EMA. You put stop loss just below the 50-day EMA and you trade it up towards the swing highs. That gave you a fantastic 2-for-1 risk-reward ratio. And well done to everyone who listened to me. Crude oil was now trading up at $73.75 a barrel. It looks to me that we're going to be testing this area of support, but I personally believe that we go towards the top. Now, how much further do we have to go? Not too much. You know, technically speaking, we have a 4.41 we still have 4.41% to rally towards the upside, but on the flip side, we could potentially drop 4.95%. So we're kind of at that midway point here for the crude oil market. So if you haven't yet got a buy position, I wouldn't really look to buy at this area here. But if you did buy down at the 50-day EMA and you still have that position open, I would keep it open and look to take profit around at $75 to $76 a barrel. So I'm going to go ahead and put a rectangle box here. I'm going to make it green. This is my take profit area. This is where I believe the crude oil markets will target going into next week. So now let's open up the Euro US dollar chart. Last but not least, we've had some volatility here with the Euro US dollar, but we're still kind of stuck at this very supportive area, which is that 1700 level. Now I'm going to go ahead and put a rectangle here. You know, as the old saying goes, guys, buy low, sell high. And I think right now is that fantastic moment where you can buy at the lows. I am very bullish for the Euro US dollar. I personally believe that the euro will perform much better over the US dollar medium to longer term. So I see this as a fantastic opportunity to buy. I think that, you know, the potential upside here from where we currently are, well, if you want to trade it up towards a 200-day EMA, you've got 1.34%, but I think we go all the way to the 1.22 area. So if I put that there, that's 4.18% upside potential here for the euro US dollar. And, you know, you could put a stop loss just below this supportive area. So let's just put one down here. Let's say you put your stop loss there, and I'm going to put that color red, and I'm going to put this color in green. There you go. That offers a fantastic risk-reward ratio. If you were to you know, to cut your losses down at 1600 and target 1.22, that is a fantastic medium to longer term trade here for the euro US dollar. We also have that RSI, which is down near that 39 level. So you know, plenty of room to run towards the upside here for the euro US dollar. So I will follow this up with a video on Monday. I'm just kind of concluding this week's movements in the markets, but on Monday I will do a second video which will explain where I really do anticipate the markets to go from Monday, Tuesday, going through to Wednesday, when I will repost, of course, that midweek review video. But that is it for today. If you've enjoyed today's video and you would like some more in-depth forecasts from myself, and you can head over to my website. I've left the link in the description of this video, www.dailymarketmovements.com. It will take you to my website here, and you can go ahead and join our signal service, which is done on WhatsApp. Just click here on the Buy Now button, and you will then be able to message me personally on WhatsApp, and I can help you with any problems or questions you may have, and add you to our amazing team of over 1,000 traders here who currently follow our trading signals. But that is it for today. Enjoy your weekend, log off your computers, go and enjoy the sunshine, go and spend your profits, and I will see you all back on Monday night. Thank you very much for tuning in to my video, and please give this video a thumbs up and subscribe to the channel. Thank you.